look at the S&P 500 as we get ready to trade Thursday, September 24th. We're in definitely clicking back into sell-off mode, and we have weekly jobless claims in the morning before the open. And if that spooks the market, we could see even lower. And here's where we're at as of now, and where we would be going if we go lower, or where we would be going if we were to bounce instead tomorrow. Here's our monthly chart. You can see we're in full-blown bearish engulfing, and we closed in this state. We went into this state on Monday and briefly on Tuesday as well, but we closed well out of this state at the end of the day. But today we sold off down below August's low, and we closed well down below it. So we were in a full-blown bearish engulfing state on the monthly time frame. And the last time we did this, you saw this at the beginning of the year in February and again in March, and you saw this back here in May of 2019 and in August of 2019, and then at the end of 2018. And if you've been trading for a while, you remember how vicious those sell-offs got to be. As of right now, here's our daily chart now. We are in a 50-day simple moving average bearish cross. Yesterday, this line kind of bent a little bit, and we avoided going into this state, but when we opened this morning, the chart had the 10-day slicing right down through the 50-day, and we really couldn't get our bearings. We came into a little bit of a rally, but faded and fell quickly, really acting on this sell signal. The last time we had a sell signal like this was back here in February. That came at sort of, close to the beginning of the sell-off, and therefore we had this really vicious move that took us down nearly 1,000 points. With this move here, we are already well on our way off of an all-time high, but I do see the possibility that this move could be doubled if we cannot recover the 50-day simple moving average, especially if we close the week again below it. That could double us down, and that would take us down here to the 200-day simple moving average and to fully test the bottom of the Q3 range. And as long as we keep putting in closes below the halfway back of the Q3 range, that makes a lot of sense to just go ahead and test the low of the range. However, on the way to getting there, we do have the 100-day simple moving average and this matching 11% off mark. This is exactly how high we got on the year, a perfect plus 11% on the year. Perhaps coming down off of this high, the market will be satisfied with a touch of the 100-day and a touch of an 11% off move. So maybe if we're only going to go down a little bit more in reverse, just be protective and just be aware that a little look below 3,200 could get us a reversal. And if that reversal can't come up high enough, such as through a halfway back point, maybe the halfway back on our week so far, or maybe it needs to get all the way back up to the 10-day. The 10-day is going to be sinking into today's range. If we can't get all the way back up to there, maybe then we roll over and fall back down and break that 100-day and go down to the 200-day. So that would be something to look out for on that subject. Here is our roadmap. Here you can see in more close-up form. Here was that bend yesterday in the 10-day line, and then today when we opened, it was right down through the 50-day. We got down here and we seem to be holding around the area where we go positive or negative on the year. Monday's low is still our new low for September at 32.29. Today we got down to 32.32. But today was different in that we closed nearly on our lows. We really haven't done that since all the way back here. Well, I guess in here too, since the start of this, more towards the start of the sell-off. We've been mostly having these ridiculous buy programs at the end of the day. You see all these tails on the candles, but not today. So that was a little bit of an ouch for me, because I tried to play on this typical scheme that they've got going where they rally us back up at least 20 points or so off the low by the end of the day. And I sold short some put spreads, and I got burned on that. I ended up closing those in the money and just eating the loss. But I had a pretty good day on puts, regular puts to begin with, so I just shrugged it off too. A lesson learned. So here is our next move down would be to the 100-day simple moving average, as I just explained, and if that's not enough to hold us together, then all the way down towards the 200-day. But we do have a pretty good range on here, and if we come in on Thursday and say the market is not spooked by the weekly jobless claims and decides to rally on that, we're first going to be looking for the halfway back point of our range that we made on Wednesday, because it was such a big range day. It really encompasses the high on the week and not quite the low on the week, but close enough. So halfway back on this day's range, or just a halfway back on the week, that probably just visually, a visual reference, I would say, was probably around here, around 32.84, and that's right where our monthly bearish engulfing level is. If we can't get above 32.84, I think we'll roll over again. If we can get above 32.84, then we've got to meet and take out the 10-day simple moving average, which is going to be coming down. It's going to be right in here, right around where our high was today when we get in tomorrow. Okay, I'm going to leave you there. Hopefully this answers your questions as to where we are at and where we are going. As always, good luck and good trading.